NBFCs, of course. So let's welcome on board one such NBFC. We have the management of Chola Financials joining us on the show very shortly. We have Arul Selvan, the President and CFO of Cholamandalam Investment and Finance Company with us on the show. Hi, thank you so much for making time and speaking with us. I just wanted to begin by discussing your disbursements and AUM because that has continued to show a solid growth of 40% thereabouts. What's the view going forward? Because you had started the year with a guidance of around 22 to 25% growth. Are you really looking at that?
See, to answer your first question, the growth for the full year, we still would like to keep it around the 25%, around the 25% mark, because Q3, Q4 of last year was very large quarters. The Q1, Q2 were small quarters. If you compare the numbers last year, you'll see that. So you will see this growth sort of from as a percentage terms petering out in Q3, Q4. And overall, we still would like to keep the targets around the 25% mark. Maybe between 25 to 30 we should clock depending on how the festival demand, sort of picks up. With regard to segments, actually we are firing on all cylinders across all the segments. So every segment has shown a reasonably good growth. Vehicle finance at a 30% plus growth, the LAP at a good growth, home loan at a good growth, and the new businesses are also picking up. So we are in a stretch of time where every business segment which we are being pursuing is showing good growth. So that's what you will see as we move into the next 2 quarters.
So, we are at that time of the year in our economy, festive season is underway, demand usually improves a lot. So what's your outlook on credit demand, especially in the new and used vehicle segment? And of course, because there was some concerns in the used vehicle segment of pressure earlier. Is that likely to change?
No, we actually have been growing the used segment well, and we see there is still some, demand as well as supply available, because the the demand is coming because there is the BS4 vehicles are coming into the market still, and we are able to sell them. And there are price differential between a new BS6 versus an old BS4 is still, attractive for the customers to go in for BS4 vehicles, especially vehicles of lower vintage, let's say in the 4 to 6 years range. So these vehicles are being preferred, and we are seeing good traction there. So I think it will continue over the 2 cycles, next 2 quarters, sorry. And we are seeing good demand even in the other segments, which is the lights and the tractors, as well as in the 2-wheelers and cars. We are not focusing, well, there is reasonable growth on heavies. We are not focusing on heavies because, right now the yields are fine and cost of funds being high. We don't want to take too much exposure on heavies. But for it, every other segment we are focusing on.
Let's talk about your home loan end of the business. That's grown very strongly this time, closer to 70% on a yearly growth mark. Talk to us about the expectations in terms of disbursements over there, especially in the second half. How's the competitive intensity in that segment? Because other players are also doing pretty strongly.
See, we are growing the home loan segment in different geographies as compared to what we have been doing a few years back. We were earlier focusing only in the southern part of the country, while now we are moving into the north, west, and south regions also. So there is a good demand, and our presence there already by way of vehicle finance branch has given us the ability to penetrate these markets without having to suffer any credit losses. So our knowledge of the market has helped us to get into these markets quite quickly. If you see, most of the other housing loan companies are more geographic specific, and while they try to attempt other regions, they have some difficulty in establishing because they are new to this geography, and the home loan market is dependent on understanding the local geography and local credit culture and the local industries in which the self-employed non-professional is engaged in. So we have that knowledge, and that helps us to quickly penetrate without taking any undue losses.
Arul, your NIMs, the margins have expanded this time round, mainly on the back of repricing of loans and partly by a marginal decline in your cost of funds. What's the outlook from here on, especially on the cost of fund side? Do you see scope for improvement further from these levels?
Yeah, NIM will move up as we reprice the vehicle finance book, we have discussed earlier. When we did have a price increase on the cost of fund side, we could not do repricing of the vehicle finance book because it was a fixed rate book. However, progressively, the fresh disbursements are coming in at higher rates, which is enabling us to sort of improve the NIM on the vehicle finance book, which is where you are seeing the traction on the yield improvements as well as the NIM improvement. We have been holding the cost of funds at same levels as Q1, and we see we can marginally reduce it in the next 2 quarters as we see. But there are a lot of improbabilities in the cost of fund side because rates are still not shown a clear direction towards a downward trend. It's been moving volatilely, but we expect that we should have some traction on the cost of funds.
Your new business have also started contributing meaningfully. What is the kind of growth you are targeting from these now?
See, our sort of expectation over the next 2 to 3 years would be that the new businesses would be in the range of around 20% of the overall AUM. This is what we are targeting. While vehicle finance, while it will keep growing at a reasonably good pace, will as a proportion of AUM will come down progressively from the current 61% to around 50 to 52%. And the LAP and home loans will also take a higher share from where they are today. So thereby, the mix will change, reducing large dependency on vehicle finance and progressively bringing up the rest of the businesses also to contribute to the overall growth as well as profitability in a meaningful way.
While overall asset quality is holding on quite well, GS3 in newer businesses deteriorated to 1.5% versus 1. Is that a cause of concern?
If you look at it from an industry perspective, we are still very much well within what industry experiences on such businesses. So we have also articulated that when we are initially starting the stage 3 numbers or the delinquent numbers would look low. But they will stabilize at somewhere closer to the industry norm. But our endeavor would be to keep it below the industry level so that we have an advantage. And that's where we are directionally moving towards.
Let's talk about your capital adequacy then. Standing shade lower than 17% on September end versus a requirement of 15. So you provided for a much higher capital. You already completed a QIP and a CCD issue as well, which has received good response. From here on, what would be the capital adequacy overall blended, the kind of runway of growth which you have right now?
The capital adequacy post the issue would be about 20%, both Tier 1 and Tier 2 put together, and Tier 1 by itself would cross the 16% or 16.5% levels. So we are quite comfortable, and Tier 2 we have large scope to bring in additional other instruments like subordinated debt or perpetual debt. So we have a good headroom. And the CCDs, and today's CCD, when I gave these numbers, the CCDs are taken as part of Tier 2. And when they convert, it will again push up the Tier 1. So we have a runway of around 5 to 6 years with these levels of infusion, including the conversion of CCDs.
Since we have with you just a clarification on the latest family settlement news, is there any impact on the business because of that?
No, it does not. So it is a direct deal from the promoters to the exiting party, and we don't have any direct connection to Chola or any of its subsidiaries or associates.
All right, Arul, thank you very much for joining us on the show, and good luck for your coming quarters as well. That's Chola Investment, the roadmap and the results. We'll take a short break. On the other side, we'll talk to Bernstein and